Hey puppy trades, I wanted to do a video analysis update of a lot of things. So we had a very busy week this week and I have a lot to talk about. I will say right now, there are three setups that I think are really nice in the stock market right now. Those are AT&T, Pfizer, and Boeing. Okay, so we're going to talk about those three setups. We talked about Boeing a lot, so we're going to go a little more brief on Boeing. We're also going to talk, of course, about the S&P 500, Microsoft, Apple, and Google. We're going to also talk about some invalidation levels that would invalidate my bullish thesis through the lens of the energy sector, XLE, and the real estate ETF, IYR. So we have a lot to get into in this video. So let's just talk a little bit about what happened this week. So the S&P 500 was down 3.68% this week. Okay, from the outside looking in, bulls in this market didn't do very well. But the problem is you're not supposed to do what SPY does in the stock market, right? Because everyone does what SPY does. You're supposed to try to outperform the S&P 500. So here at Puppy Trades, that's what we do. And we did that very well this week. Now, obviously, take this part of my bio extremely seriously. I'm not a certified financial advisor. That's under every video. That's extremely important. Okay? So this is just a technical analysis education channel. That's all I've ever claimed this to be. But I will say some very interesting things happened this week. And a lot of you guys are probably drinking right now. I think this guy might be drinking. He says that he made $30,000 on my Novavax call. Now, I was analyzing Novavax because they formed a very beautiful wave 1 and ABC correction wave 2. They had very clean, look at that very clean reaction on the median where the wick of the daily candle hits the median. We have our completed 1 ABC wave 2. We had really nice reactions on the lower bound of this pitchfork. I knew we were bound for the median. Okay, we had declining volume confirming that all of this was bullish consolidation, and this stock that got $1.6 billion from the federal government was in phase 3 of a clinical trial. So it was ready for a massive move from that perspective. The wave count, in my opinion, was clearly bullish. We had this large impulsive reaction. We closed above the high right here, and we had really nice reactions resting on the lower bound of this pitchfork. So I expected that we were going to go wave 1, ABC, wave 2. We were going to go from the lower bound of the pitchfork to the median of the pitchfork. This person whose bio says he was an endovascular surgeon, he says he made $30,000 off of this Novavax call, which is great for him. I'm not a certified financial advisor. But if I am educating people and they're making money, there's absolutely nothing wrong with that. I looked it up. An endovascular surgeon does something with catheters, access to arteries and veins. This guy sounds like an extremely specialized surgeon who works with arteries, and I would call him a heart surgeon. I'm not quite sure if that is specialized enough. Endovascular surgery is an innovative, less invasive procedure used to treat problems affecting blood vessels, such as an aneurysm. This guy sounds like he's pretty smart. I have a feeling that he knew a lot more about fundamental analysis of Novavax than I did. But me, just connect your pitchfork wave 1, connect it with the high of wave 1 and the low of wave 2, reactions on the lower bound, reactions on the median, boom. Novavax went right back to the median. This guy said he made $30,000. The trader Stock Guru said he made about $5,000 on Novavax options. So great for him. We also had a few other big winners. Camping World, I personally did very well on. I cashed out a 635% return on Camping World Monday morning. This user says that he is currently up about $2,800 on Camping World options that appeared to not expire until June. So great for him. So I'm not a certified financial advisor, but I do make educational videos, and it seems like you guys are learning a lot. That's really great. This was the start of the week. I thought this was going to be the best call of the week. It wasn't, but We're also going to talk about how I used the implied volatility screener, which I've talked about before. This is iVolatility.com. Beyond Meat showed up on iVolatility.com's low implied volatility screener. It was in the bottom 5% of its implied volatility range all year. So we knew options are extremely cheap. If you think and ask yourself, when is smart money going to be buying options? They're going to do it when option premiums are cheapest. And option premiums are cheapest when implied volatility is at a trough, when implied volatility is at a low. And I think it was really interesting that a few people were even saying that analysts kept cutting Beyond Meat, which I think is really interesting because analysts keep cutting Beyond Meat, and then on January 8th, it shows up on our implied volatility screener saying option premiums are very cheap. Within 2 or 3 days, announcement with Taco Bell is announced, and then of course it gapped up to a new all-time high, or it got very close to gapping up to a new all-time high after news that it had an announcement with Pepsi. So analysts were cutting it before this post, but the options market was saying, actually, this is when the smart money is going to be buying calls, because that's when option premiums are cheapest. We had another resource, the bar chart straddle index, saying, Beyond Meat had very cheap options right here. So we had two sources saying that Beyond Meat had very cheap options. And if you think about that, when will smart money be buying options? They're going to be doing it when option premiums are cheapest. So it's not just Beyond Meat. I'm not a one-trick pony. But if we look right here, I said, I hate to see her go, but I love to watch her squeeze. I said Beyond Meat is about to tell GameStop to hold my beer. And then, of course, it got pretty exciting when it did gap up to a new all-time high. And, this guy, apparently, he did pretty well, too. So, that's how we use implied volatility to find setups that are about to explode. Beyond Meat, not the only one. We look at Workhorse. I said Workhorse completed a wave 1 during a 6-month run. I did a whole video on this. I said Workhorse completed a wave 1 during a 6-month run from 1 to 30, completed an ABC correction with declining volume, has a beautiful Andrews pitchfork. It's going to reach 33 in 6 weeks. We hit that perfectly, almost exactly in my time target. And that day, I posted, hey, we have recon from the options market. Workhorse is in the bottom 4% of its implied volatility range all year. Options are extremely cheap, ready for a huge move. Voila, we're at the price target. And I think a lot of you guys did really well on that one. I heard someone say they made an 800% return on this setup. We'll talk about that. But, I'm not a certified financial advisor, but I am, I would say, a teacher. And it seems like you guys are learning a lot. So great for you. This screener for low implied volatility has been uncanny at letting us know when stocks have really cheap options and they're ready for huge moves. Peloton is another great example. I said Peloton completed an ABC correction with wave C equaling the length of wave A. It's going to go the length of this wave, placed at this low. Beautiful pitchfork. Very low implied volatility. Of course, we know Peloton did reach 169 almost exactly 2 months from this post. And, that's because this was a 2-month run. So this was going to be a 2-month run. Okay, so that's how we use implied volatility to find stocks that are ready to explode, stocks that have very cheap options. Okay, and that was kind of, those are the victory stories. I think there's one more thing I want to talk about. I just want to address the Reddit situation for a little bit. I talked about Nokia and First Majestic Silver before all this nonsense, all these stories started happening. And of course, we're very upset that some of these brokerages have decided to, start treating us like kids, giving us our bedtime and telling us how many shares we can buy. But way before all this Reddit nonsense, I said, hey, AG1212 Nest, this is a massive monster setup. This is a large silver miner. I said Nokia was a huge nest ready to explode all the way from 3.91. Some of you guys still think that, Redditors are doing this. I want to know which one of your friends on Reddit is putting $62 million into the dark pools. I don't know anyone who has $62 million who is on Reddit personally. Maybe you guys do. You know, let me know. But this guy, one of these Redditors apparently dropped $31 million on AMC theaters. Very strange. I didn't know Redditors had millions and millions and millions of dollars that they were putting into the dark pools. Nokia, someone put $261 million. So you're telling me a Redditor dropped $250 million on Nokia in one trade? He didn't do it on Robinhood, okay? But this just goes to show, guys, nothing moves in the market without Wall Street's blessing, all right? If you guys are dumb enough to believe that, someone on Reddit is moving Nokia or, First Majestic Silver, I have an igloo to sell you in Arizona, just Venmo me. You guys apparently have a lot of money on Reddit. $261 million on Nokia in a single order. Very interesting. I don't know any Redditors who drop, $500 million in one trade. Maybe you guys do. But the point is, I was talking about First Majestic, 1212 Elliott Wave Nest at 12. I was talking about Nokia, massive breakout at 3. Okay, nothing moves in this market without the blessing of institutional computer algorithms, okay? And I'm not gonna, belabor this point, but, if you really think Wall Street Bets is moving First Majestic Silver and Nokia, you honestly should never place a trade ever, and that's for your own safety, okay? Let's keep talking about the actual stock market. So one thing I always say is don't worship at the altar of SPY. What does that mean? That means we're trying to outperform SPY, okay? So SPY was down 3.68% today. Several people from Workhorse, Beyond Meat, Novavax, I imagine First Majestic Silver and Nokia as well, made massive returns. Okay, so we're trying to outperform SPY. And also, when you just stare at SPY all day, you're missing a lot of what the rest of the stock market is telling you. Okay, we're going to go over some of that right now. Let's just look at SPY, though, real quick. Talk about where we get some of these price targets. So this is our Andrews pitchfork. We can connect this low with this high and this low. Beautiful reactions on the median. Boom. Beautiful reaction on the median. It clearly acts as a magnet. It clearly acts as resistance. As soon as we get away from the pitchfork, we go right back into the lower bound of the pitchfork. We have all these reactions on the lower bound. Now we're getting away from the pitchfork. I do believe that SPY is going to go back to the lower bound of this pitchfork, back to the median of this pitchfork. We're going to talk about invalidation levels through XLE and IYR. And here's why. Because the SPY invalidation level, for my primary setup, that we're at least going to 392 from a technical perspective, from a pitchfork perspective, I do believe that we're going all the way to this median. So I am expecting to melt up. I am expecting that this week was a bear trap. We're going to talk about other stocks and other sectors, other ETFs, that will really invalidate my bull thesis. The problem with SPY right now is that the main projection I have is that this is a bull flag, clear as day. This is a bull flag, in my opinion. Conservative equal legs target is 392. And I do believe that we are going to go back to the median of this pitchfork. So I'll talk about invalidation levels on other stocks and other sectors. One other thing, I can't, show you guys every single aspect of my analysis, or these videos would take, years. But if we just, use some Fibonacci levels, the inverted 123.6% and the inverted negative 78.6% retracements of the prior correction. We'll talk about how this is an ABC correction, are generally very, very nice targets to hold out for. So if we go right here, this high was 394.88. So I'll go type that in. 394. No, I don't want 394.88. Apply. And then this low was 272.99. So we'll go 272.99. And we see very well that 321 was a great target to hold out for, which was the negative 123.6% inversion of this correction. If we go down here, the exact same phenomenon happens with this correction right here. So this high was 263.33. And then this low was 243.90. And we see that 287.35 was the negative 123.6% retracement of that correction. That ended up being a great place to hold out for. The only reason I'm talking about that is because not only is the bull flag equal legs target 392, but if we take this correction from 354.02 and then this low of 322.60, then that, interestingly, is basically, that's the exact same level of the bull flag equal legs target, 392. So 392 is not only the bull flag equal legs target, it is the negative 123.6% retracement of the prior correction. And I actually do think we'll go a little higher than that. I think we're going to go to the lower bound of this pitchfork. We're going to go back to the median of this pitchfork. So, still, yes, if you take this low with this high and this low, I believe that, quote unquote, the top, at least for this bull run, is going to be the median of this pitchfork. We're probably going to go, as we can see right now, the median is well above 400. 392, though, from, the technical lens, is a very safe target to hold out for, in my unprofessional opinion. Okay, and that comes from the length of this bull flag and time and price placed at this low. And that also comes from the negative 123.6% retracement. Both of those levels take SPY to 392. So we're going to talk about a few other things. Also, Microsoft broke out to a new all-time high this week. So that would, from an LA Wave perspective, confirm that everything from September 2nd to January 15th is consolidation for another leg higher. So if we take this low connected with this high and this low, we have our beautiful reaction on the median of this pitchfork. And then as soon as we get away from the lower bound of this pitchfork, boom, the lower bound acts perfectly as a magnet. This is exactly what we want to see. So, this is an extremely valid pitchfork, and we just broke above this high. So from an LA Wave perspective, that confirms that all of this was consolidation. I think at the very, very, very minimum, it's silly to say that Microsoft won't make it to at least 252, 253, but I actually believe Microsoft is going to go all the way to the median of this pitchfork. So, obviously, if Microsoft has a lot more upside, it doesn't really make sense to say, that SPY and QQQ are going to crash, right? And that same message, that exact same thing happened to Apple, right? We broke above this all-time high, and then we made a new all-time high. The most conservative bull flag equal legs target will take Apple to 151, 152. We haven't reached that yet. So, we're either saying that these were just massive false breakouts and that neither of these stocks will reach the most conservative bull flag target, or we're saying that SPY was a bear trap. And I do believe SPY was a bear trap. I believe that if you take the length of this move in time and price, you have a very beautiful bull flag. Declining volume confirms bullish consolidation. You take the length of this move, you place it at this low. That gives you a super conservative target, in my opinion, of 150, 151, 152. We've been talking about holding out for Apple to reach 151, 152 for a while now, and I still do believe that we're going to be able to do that. And obviously, if Microsoft and Apple have more upside, SPY and QQQ have more upside. So that's another reason why I say don't worship at the altar of SPY, because if you look at other stocks and other sectors, other components of SPY, you're going to know everything you need to know. And for Apple, I think the best pitchfork right now, you take this low, connect with this high and this low, and boom, we see as soon as we get away from the lower bound of this pitchfork, we go right back to the lower bound. And Apple, honestly, is probably going to go to the median of this pitchfork it looks like that could be all the way at 160 right now. So in my opinion, there's a lot of evidence that Apple, at the very minimum, has to go to 150, 151, 152. It's actually probably going to go all the way to the median of this pitchfork. Let's see if it goes to the lower bound of this pitchfork first. But bottom line is Apple and Microsoft broke above this high, so there's more upside from an LA wave perspective. I think Microsoft conservatively goes to 252. Apple conservatively goes to 152. And those are conservative because the median of these pitchforks that we've just talked about are actually higher than those price targets. So, we believe that Apple and Microsoft have more upside. We believe that SPY and QQQ have more upside. Okay? But where will my real bullish thesis be invalidated, at least in the intermediate term? And let me just say that I made a video on the very first of January talking about my favorite stocks to buy and hold personally for 2021 and beyond. They were Camping World, Pfizer, Lordstown Motors, Lee Auto, and Beyond Meat. I haven't even considered or even thought about selling those long-term holdings. Every single one of those except for Pfizer is already up about 20, 30, 40%. So, for me, what I would do personally, not investment advice, is have a stop loss at break even for those holdings that are already in the money from a shareholding perspective. But, really, I would just look at the stop losses that I posted in those videos. I wouldn't consider personally even thinking about selling long-term shareholdings at this point. So just to give you a little gauge of where I am, from a bullish perspective, this is just to let you guys know in the intermediate term what I'm looking for to invalidate my bullish thesis, probably from an options perspective. Okay, so the most important chart to me right now is XLE. This is really this is the big one in my opinion. Clear as day, wave one. We have our ABC correction, A, B, C correction, and then we have our wave two. We take the beginning of wave one, we connect with the high of wave one and the low of wave two. We see a gorgeous reaction on the median of this pitchfork with a daily candle, and then we see another gorgeous reaction on the median of this pitchfork, both of these with wicks on daily candles where the median acts as a magnet. So I really like to see that. We have a beautiful, beautiful Andrews pitchfork here. From an Elliott wave perspective, I do believe this is a wave one, an ABC correction wave two, and then I believe from this low we've gone wave one, wave two. So we talk about invalidation levels in the intermediate term. XLE below 37, my bullish thesis in the market is invalidated, at least in the intermediate term. Like I said, wouldn't even consider selling any of those long-term shareholdings unless they reach the stop losses that were posted in my 2021 top stocks for 2021 and beyond. Almost all of those stocks, besides Pfizer, are up about 30% just from a shareholding perspective. So, another way to consider that, personally, you would consider having a stop loss at your break-even level. But honestly, for Lordstown Motors, Camping World, Beyond Meat, Lee Auto, I wouldn't, and Pfizer, we'll talk about Pfizer in a second, I wouldn't consider selling those long-term shareholdings from a 401k IRA perspective. Obviously this is not investment advice. Wouldn't even consider touching those, wouldn't even think about considering touching those. This is all just from an intermediate options trader perspective. When is my bull thesis invalidated? We'll talk about the IYR real estate sector in a second. But right now, if XLE gets below 37, that's going to invalidate that this is a wave one and a completed wave two. But I do believe that if we take the length of wave one and time and price, places this wave two low, very clearly, XLE is going all the way to 51. And if we take the length of this wave one from this low, place it at this wave two low, that also takes XLE to 51. And both of those, we'll also see that XLE goes to the median of this pitchfork that has a really nice reaction on the median, So, XLE below 37 is when my bullish thesis is invalidated in the intermediate term. So we'll keep a very close eye on this. But if we also look at the IYR real estate sector, this is another really clean one right here. We have a wave one, an ABC correction, lots of declining volume confirming bullish consolidation, and then boom, we break above this high. We confirm that all of this was consolidation. We confirm that there's more upside in store. And we take, very conservatively the length of this wave one and place it here. It doesn't really make sense to call a top in the stock market, in my opinion, before IYR reaches 96. But really, if we take the entire length of this move from the March low, place it at the June high, and then we place that at the election, pre-election low of 1029, then that's going to take IYR all the way to 106. So actually, one setup I really am considering for myself personally in the stock market is IYR calls, an even number of IYR calls with a stop loss below 81.46, and then targeting. I believe that you'd be able to, or I would be able to sell half of those calls at 93 for 100% gain, remove the original risk of the trade, and then keep holding out for the median of this pitchfork to be reached. I love this reaction right here where the daily wick hits the median of the pitchfork. I love this reaction where the daily wick hits the median. But this is another one right here. So I'll just tell you guys right now, 81.46 on IYR is broken. That's going to validate a lot of my bullish thesis. So we'll say right now, XLE below 37, IYR below 81. I'm going to really, really, really reconsider my intermediate term bullish thesis. We're not even close, in my opinion, to, like I said, I'm trading Camping World, Ride, Lee Auto, Beyond Meat from a shareholding perspective. I'm trading those individually. Those are long-term shareholdings. I'm not even considering touching those unless the posted stop losses in those videos were touched. Most of those trades actually are, 30% in the money already, and that's with shares. So, a trader theoretically could have a stop loss at break even on those, and that would also become a risk-free position. Okay, but IYR below 81, XLE below 37 is when my intermediate term bullishness gets invalidated. I actually do expect, though, that this is going to be a wave one, an ABC correction wave two. We've broken above this high already. We've broken above this high. From an LA wave perspective, that confirms that all of this was consolidation. This is your classic bull flag with declining volume. And then we have a wave one from this low. So let's see. I believe a wave two is in here at 81. So as long as we're above 81 on IYR, as long as we're above 37 on XLE, my bullish thesis in the market is completely intact. And also, let's just look at Apple and Microsoft again. We just broke above this high from September. We just broke above this high from September. And we have really nice confirmation that these are solid pitchforks. So, it doesn't really make sense to say that, both of these were massive false breakouts. If we look at Google right now real quick, very similar setup for Microsoft and Apple, where Google broke to a new all-time high today. So calling a top in the stock market the week that Google, Apple, and Microsoft broke above a new high after consolidating for a super long time, that doesn't really make sense from an LA wave perspective. You got to trade the whole market together, and I do that. So the very, even the most conservative bull flag right now for Google, if you just take this low connected with this high and place it at this low, you are conservatively for Google going up to 2,000, right? And we're gonna go off the lower bound of this pitchfork to the median. If we take this low connected with this high and this low, beautiful reactions on the median of the pitchfork. Beautiful reactions on the median of the pitchfork. Proven to act as a magnet. Proven to act as a magnet. And then now we're on the lower bound resting right now. We formed a bull flag with declining volume confirming bullish consolidation. The most conservative bull flag where we're just taking the next major low. We'll take Google all the way to 2,000. So in my opinion, but actually I don't think that it's going to stop at 2,000. Realistically, I think that we can actually take this low connected with that high, clone it, and then Google actually will go all the way up to 2,100, which is pretty in line with where the median of this pitchfork looks like it's going to be. So I think that the most conservative bull flag takes Google to 2,000. The realistic bull flag takes Google to 2,127. As we talked about, Apple very conservatively goes to 151 with its equal legs target. Microsoft very conservatively goes to 252 with its equal legs target. So if we believe that Google, Microsoft, and Apple are going to have more upside. It doesn't make sense to say that there's a major drop in the stock market. Okay, so I think I've made that clear. But remember, from an invalidation perspective, in the medium term, I want this wave 2 to hold on XLE of 37. I want this wave 2 to hold on IYR of 81. Okay, now let's get into some of my favorite setups. We talk about Boeing. I scaled into Boeing calls right here at 205, and I added to my position off a test of this high. We're going to talk about a wave count right now. If we get this pitchfork out, we connect this low with this high and this low. No, that's not a pitchfork. If we get our pitchfork out and we connect this low with this high and this low, we can see that right now Boeing is on the lower bound of this pitchfork. We have a really nice reaction on the median of this pitchfork. I was aggressively saying that it's actually going to be this pitchfork, and we'll talk about the wave count right now. This is still a very valid pitchfork in my opinion. We have reactions on the median. We're a little off the lower bound. I think Boeing's going to go back to the lower bound. From a Elliott wave perspective, this is clearly a wave 1. And then if we clone that, we take the length of wave 1 and time and price, and we place it at this low, then what we say from an Elliott wave perspective, now that Boeing has broken above this wave 1 high, is that Boeing is incomplete until it reaches 262, right? It hasn't reached 262 yet. It hasn't reached the length of wave 1 in time and price. And I'll go over in a second that I actually think 262 is a really conservative target. But, wave 1, wave 2, we break above the high of wave 1. And that confirms, in my opinion, that Boeing is incomplete to the upside. From an Elliott wave perspective, it has to go at least the length of wave 1 in time and price, places the wave 2 low. It hasn't done that yet. That number would be 62. Like I said, I don't think that 262 is the target. I think that we're actually going to go a lot further. So we'll talk about that right now. If we go and we take the 1.618 retracement of Boeing, this is your classic wave 3 target. What this high was exactly, be exact with this stuff, especially when you're doing fibs. 234.20. And then this low was 119.33, or this is 113.89. So that is going to take Boeing all the way to 308 for our wave 3 target, the wave count that I believe is still very valid. 1, 2, and then wave 3 will conservatively take Boeing to the median of this pitchfork. And it's going to take Boeing to at least, in my opinion, 308. This is further evidence, in my opinion, the stock market has a top. Boeing hasn't reached the equal legs target of wave 1. From a very conservative Elliott wave perspective, Boeing, quote unquote, has to go to 262. I believe it's actually going to go from the lower bound of this pitchfork to the median of this pitchfork. If we take the 1.618 extension of Boeing, that's going to be 308. We're going to go to the median of this pitchfork. Looks very nice to me here. Okay, so as far as invalidation level goes, it's tricky with Boeing. Technically, this wave count isn't invalidated until 141. Obviously, that's way too wide of a stop loss. What I'm expecting right now is that Boeing has completed an ABC correction, A, B, C correction from this high in wave 1. We've broken above that high. We've confirmed that it's completed ABC correction. So what I really expect is that Boeing is not going to be able to go below 189 very long. If Boeing breaks 189, I expect these computer algos to be buying the crap out of this, in my personal opinion. So that's why I added to my Boeing position when we got as close to 189, is I think we can go. But we'll say right now, 189 is the line in the sand. If 189 is broken, I wouldn't, personally, I'm not going to panic sell the low on my calls, but 189 is broken. I expect it to be recovered very quickly. So we'll call that, our line in the sand, so to speak, on Boeing. The more Boeing's below 189, the more my thesis is invalidated. But, this wave count, we've completed an ABC correction from this high. We've broken above this high, and Boeing is incomplete to the upside till 262. And then we got really nice confirmation from American Airlines even that Boeing's going to take another leg higher. We see that American Airlines went all the way up to, well, it actually went all the way up to 31 pre-market. We don't have that right now, but I did document that Boeing reached, or that American Airlines reached 31 on my Twitter page. My mentions. Yeah, we have documented that American Airlines reached 31 in the, I believe it reached in the pre-market session. So that's from a sister trading standpoint. Yeah, right there. The algos have already taken American Airlines above 30. That's going to be a lot of confirmation that this is the exact same low, the exact same high, the exact same low, basically the exact same pitchfork, and Boeing's going to, have the sister trade right now. We also have confirmation from Novavax from a fundamental perspective that the market's really going to like that news, and that's going to be really good for the travel and leisure sector. Okay, but yeah, American Airlines all the way up here at 30. That gives us a lot of confirmation that Boeing is going to take another leg higher as well. So we talked about Boeing. We talked about the real estate sector, the energy sector. So let's look at another really nice setup right now. I like AT&T a lot. Love AT&T right here. So I personally am trying to get into AT&T calls. The closer that we get to this low right here, 26.35, the more I want to buy AT&T calls. This wave count is that we've gone wave 1, A, B, C, wave 2, and then have an impulsive reaction off of this wave 2 low. If we connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, we have really nice reactions on the median of this pitchfork. I love these candles on the median of this pitchfork where the wicks are hitting the high. So I would say right now that I'm trying to buy calls, for me personally, as close to 26 as possible. I think 27, 27.5, that's really when I'm, hitting the buy button on AT&T calls. This also pays a really nice 7% dividend. It's a member of the dividend aristocrats. That's another way to think about it. But if we go wave 1, A, B, C correction, wave 2, another cool thing about this is I'm buying as close to 26 as possible. So the invalidation level and the stop loss level are the exact same level. If 26.08 is broken, that's going to be the stop loss level. But I am honestly, personally, getting September and December calls on AT&T. I wouldn't shy away from 2023 calls either. If you're thinking about 2023, you might as well just do shares for me personally because they pay a 7% dividend. We go wave 1, ABC, wave 2, impulsive reaction. Now we're correcting from this high, and I'm trying to get into AT&T at 27, 27.5, as close to 26 as possible with a stop loss below 26. I really like leap calls for myself personally. We go wave 1, ABC, wave 2. 33 is an extremely conservative target because that's just the length of wave 1 places wave 2 low. We take the 1.618 extension for wave 3. That's going to take AT&T to 37. So kind of what I'm looking at right now is buying calls in September that expire in September and December on AT&T as close as we get to 26. And then I do believe that I conservatively will be able to sell half of those at 100% gain at 33. By the time we get to 33, I actually think I'll probably be able to sell for 100% gain before then. And then I let the rest ride until 37. We actually might even see AT&T go higher than 37 because remember, that would just be wave 3. We consolidate sideways into a wave 4, then take a wave 5 higher. But, that's the general gist. I'm looking at these as a leap call trade. I don't know how fast AT&T is going to reach 37, but I definitely think that me getting September calls, me getting December calls, an even number amount, that's going to be plenty of time, in my opinion. This has been building a huge base for a really long time. Wave 1, ABC, wave 2, and then very conservatively, AT&T's got to go to 33. So I'm going to buy an even number of calls that expire in September and December as close as we can to 26. I think 27 is, my ideal number where I'm really hitting that buy button. And I'm going to sell an even number I'm gonna sell half of those calls by the time we get to 33. Once that position is up 100%, and then I'm gonna let the rest ride until 37, and we'll see when we get there if it's worth it to keep holding those calls for that wave 5 higher. That's going to depend on how long it takes. I really think that 37 is going to get hit in the first half of 2021. But just to be safe, and honestly, why not? From the way options are priced, they're extremely cheap right now if you go look at those. So I really like AT&T at the very minimum to 33 and then eventually to 37. So I'm going to buy an even number of AT&T calls as close to 26 as possible with a stop loss below 26, and then sell half by the time we get to 33 up 100%. Let the rest ride to 37. And that's just what I'm doing. We look at Pfizer right now, and that's another setup that I entered this week. I have September calls on Pfizer. I think a really tight stop loss. I'm not interested in stopping out of a position that I entered 3 days ago. This close, but I think a really tight stop loss for this Pfizer setup would be 34.60. The ideal stop loss, and this may be where I would consider, a put even in lieu of a stop loss, would be 31.61. But 31.61 is going to be the invalidation level for this Pfizer projection. I believe that we've gone, wave 1, wave 2, wave 1, wave 2, beautiful pitchfork by connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2. Gorgeous reaction on the median, reaction on the lower bound, gorgeous reaction on the median again. I think we're going back to the median again. That's going to take Pfizer, up into the mid 40s. We'll talk about how we get our Fibonacci levels for this too. Let's just remember real quick that, from a long-term perspective, Pfizer, by the way, pays a really good dividend. I wouldn't be too afraid of shares for myself personally on Pfizer as well. From a long-term perspective, I really like this, as a cornerstone investment for myself as a shareholder because they pay such a great dividend, like AT&T. But if we connect the beginning of this wave 1 on the largest degree with the high of wave 1 and the low of wave 2, gorgeous reactions on the lower bound, gorgeous reactions on the median. The idea of the pitchfork, you buy off the lower bound, you sell at the median. And we can talk a little bit, from a wave count perspective, but this is, very clearly, in my opinion, a wave 1 on the largest degree, an ABC correction from this high. A, B, and then a C correction from that high. That's going to put in our wave 2. And then we have our wave 2 low. And then we go wave 1. And then wave 2. And so this is a ginormous nest on Pfizer. I really like this setup. This has a lot of upside, in my opinion. So from a shareholding perspective, 4% dividend, I really like that as a long-term cornerstone investment. But I took September calls on Pfizer for myself. Play for this reaction higher. We'll talk about in the intermediate term how we get our targets. I'm targeting 47 for Pfizer right now. Where does that come from? Well, if we look at the 1-year chart of Pfizer, like I said, this is the wave 1, this is the wave 2. So for our classic Elliott wave, wave 3, we take the 1.618 extension of Pfizer. That's going to go to, for Pfizer, that's 39.22 was this high. 39.22 was this high. This low right here was 27.88. So yeah, if this low of 31.61 holds, this is still a perfectly valid wave count. We talked about our pitchfork as well, where we have this gorgeous pitchfork for this wave 1. This wave, high of wave 1, low of wave 2, boom. Incredible reaction on the median of the pitchfork. The median of this pitchfork is proven to act as a magnet. I think Pfizer is going to go back to the lower bound, back to the median. I love what we saw from Novavax from a sector perspective. And then we can see right now, the idea is that I'm buying an even number of Pfizer calls. And then I'm going to sell half of them when they're up 100%. I have a stop loss below 31. 31.2. Yeah, I have a stop loss below 31.61. I'm planning to sell half of those Pfizer calls. Let me make sure I have that right. The 1.618 extension is what we want. Yeah. So the 1.618 extension is going to take Pfizer to 46. That's basically this high from November 2018. So I'm planning to sell half of those Pfizer calls when they're up 100%. Let the rest ride at least the 46. But from an LA wave perspective, remember this is our wave 1. And then we believe that the March low was our wave 2. So we take the length of wave 1, we place it at wave 2. That gives us our minimum wave 3 target. Because remember, wave 3 is at least the length of wave 1. Very minimum is actually 1.618 times the length of wave 1. But, that's where we get Pfizer to 60, 62. So, my idea right now is that I'm buying an even number of Pfizer calls, planning to sell half at the very minimum by the time 46 is reached. My expirations right now are in September. If Pfizer continues to be stagnant, I'll keep scaling into longer term expiration dates. But if we take the length of this move and we place it at this low, that gives us a very conservative wave 3 target of 62. So I believe that by the time 46 is reached, I'll be able to sell half of those calls up 100% and let the rest of the position ride risk-free to 62.